Could Solana be the sleeper play of this entire crypto bull run, quietly setting up the next wave of generational wealth? Or is this just the last big pump before a brutal collapse? In the next few minutes, we are going to break down exactly what is real, what is hype, and what smart money is actually watching with Solana right now. Welcome to the generational wealth community, your pathway from knowledge to legacy. Solana was left for dead after outages, FTX, and a brutal bear market. Yet here we are in early 2026, and Sol has fought its way back into the top coins by market capitalization, according to price data from major aggregators like CoinGecko and CoinMarketCap, as of early February 2026. Solana is trading in roughly the mid-$80 range, with a market cap in the tens of billions of dollars. That is not a meme bounce. That is serious capital treating Solana as a core part of the crypto ecosystem again. The key is that this comeback has not been driven only by speculation. Solana's core value proposition is still the same. Extremely fast block times and transaction fees that are a tiny fraction of a cent. That combination has made it a natural home for high-frequency trading, NFTs, and now a growing range of DeFi and payment applications. When you see developers shipping, users actually transacting, and new projects choosing Solana because of economics and performance, that is when you know there is at least some real foundation under the hype. The first major pillar for Solana's long-term thesis is ecosystem growth and real-world use cases. Solana is slowly shifting from being seen as the meme casino chain into something closer to an internet-scale financial layer. One of the biggest signals here is institutional adoption. Payments giant Visa has been actively piloting and expanding stablecoin settlement using Solana, specifically with USDC, according to Visa's own announcements and blog posts. That is huge because it validates Solana as infrastructure for real payment flows, not just speculative trading. When a brand like Visa chooses your chain for settlement, it tells other enterprises and fintechs that they can at least consider you for payments and DeFi rails. Combine Solana's low fees with the rise of AI and machine-to-machine interactions. You can start to see why some analysts call Solana a potential micropayments powerhouse. Think automated subscriptions priced in pennies, streaming payments to creators, or tiny machine payments between devices, all at scale without fees eating the whole transaction. That is the type of use case that does not just pump price once. It can support an entire multi-billion-dollar economy on-chain. The second pillar is the Firedancer upgrade. For years, critics have hammered Solana for network instability and outages. Firedancer is the direct response to those concerns. Built by Jump Crypto as an independent validator client, it is like giving the network an entirely separate engine, coded and optimized by a different team purely for performance and resilience. The big concept here is client diversity. Instead of the whole network depending on one software client, you now have multiple, so a bug or failure in one does not necessarily bring the entire chain down. After extensive testing on testnets, Firedancer began running on mainnet with a portion of validators in late 2025. And validator adoption has been growing through early 2026, according to public Solana developer and validator updates. While the headline theoretical numbers like potential throughput in the millions of transactions per second are still a long-term target. The important takeaway is that Solana is actively hardening its infrastructure to support internet-scale applications without constant downtime. That directly addresses one of the biggest historical bear arguments. So what does all of this mean for SOL's price and opportunity in this bull run? At current levels in the mid-$80 range, Solana is no longer a microcap moonshot. It already sits in the big leagues. To double or triple from here still requires a massive amount of new capital. That is both a strength and a limitation. The strength is that large capital allocators see Solana as credible enough to park serious money there. The limitation is that the easy, early 100 times upside is almost certainly gone. Most public analyst outlooks that reference Solana today frame it as a potential blue-chip, high-beta play on the broader crypto and tokenization trend, rather than a lottery ticket. Many projections talk about SOL trading at a multiple of its current price by the late 2026 to 2030 period if the network continues capturing DeFi, stablecoin settlement, and tokenized real-world assets. On the very bullish end, some long-term projections suggest that if Solana becomes the default infrastructure for micropayments and tokenization at scale, A 4-digit SOL price by around 2030 is possible. On the more conservative side, analysts see a more modest multiple from today's levels, especially if competition intensifies or macro conditions tighten. Now, the elephant in the room, the risks. First, market cap gravity. With Solana already worth tens of billions of dollars, every new leg higher requires billions more in fresh demand. That is a very different game from buying a tiny project and hoping it catches a narrative. Second, competition. Ethereum Layer 2 ecosystems, other high-throughput chains, and even emerging modular architectures are all fighting for the same developers and capital. If another chain can offer similar performance with better decentralization, regulation-friendly features, or stronger community incentives, that can cap Solana's long-term dominance. Third, reputation and trust. Even with Firedancer and recent stability improvements, many institutional players and conservative builders still remember Solana's past outages. It takes time and a long streak of reliable performance to fully erase that narrative. And finally, macro and regulation. Any tightening of global liquidity, new securities rulings, or aggressive enforcement actions against major exchanges or stablecoins can hit the entire crypto market, including Solana, regardless of how strong the tech looks. So where does that leave you? Solana today is not an obscure speculative token. It is a maturing, high-performance blockchain with real usage. Serious institutional experiments like Visa's USDC settlement, and a clear roadmap to greater stability through upgrades like Firedancer. The opportunity is tied less to a single price target and more to the multi-billion-dollar digital economy that is already starting to form on top of Solana's rails. The key question you have to answer is this: do you believe Solana will win enough of the payments, DeFi, and tokenization market over the next cycle to justify a significantly larger valuation? Given the risks from competition, regulation, and its own history? If you are getting value from this Solana breakdown and you want more calm, data-driven crypto analysis focused on building long-term wealth, make sure you stay locked in with the channel. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only, and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.